Radix is a powerful layer 1 distributed ledger that's tailor-made for DeFi, but its token XRD has been lagging in terms of price action compared to its peers. Many people have pointed to their tokenomics as the reason why. But did you know that all of that has changed now? Yep, they recently unlocked all their tokens with major support from their community. So in this video, which with full disclosure is sponsored, I'm going to dive into all of the changes and touch on why you may see them in the top 100 projects any day now. If that sounds interesting to you, then strap in my friend and let's roll the intro. Here's the thing, I hold Radix's XRD token because I honestly think that they have top tier tech and believe in their vision. It's not because they sponsored us. I could easily sell it into ETH if I wanted to. But I also have to be fair and acknowledge that its price action has been pretty disappointing and lagging compared to other hot projects like Solana, Avalanche, or Phantom. Many people within the Radix community pointed at the tokenomics as the single biggest reason for this lackluster price action. Fortunately, the team has been listening and they decided to make some major changes to alleviate those concerns. That's why I was super curious as to what those big changes were and what it could mean for the long-term prospects of this project. So here's what we're gonna do. We'll start with the old tokenomics, then we'll share why people were not happy with it. Next, we'll dive into the new tokenomics and then end with why that may be bullish long-term and why they may show up in the top 100 of CoinMarketCap or CoinGecko any day now. By the way, this is not going to be an explainer of the Radix project, or else this video would be like 30 minutes long. I did make an overview video about them though that I'll leave for you in a link at the end of this video if you want to learn more. Alrighty, as for the old tokenomics, let's start with this table from the economics white paper. What you're looking at is the unlock schedule for XRD tokens. Basically, the initial token supply started off as 99% locked, and then it would unlock in 5% chunks every time the price increased by 2 cents. So every additional week above the next unlock price, there was 5% more supply unlocked that could be withdrawn from the vault and traded or whatever really. But if the price stayed below the next milestone, then no new unlock would happen. This really frustrated investors because the price stayed within this range, as you can see here, and was just unable to break that next 19-cent level. To better understand why this unlock schedule was suppressing the price, we only have to look to who the locked supply was for, because it was for the early community members who collectively contributed 3,000 BTC years ago, as well as the people who bought in at the October 2020 token sale at a price of 3.9 cents per token. Some of the early contributors especially want to sell so they can finally diversify after holding their investments for so long. So that leads me to my first reason as to why the Radix community wanted to change to the tokenomics, because only 35% of the supply was unlocked. So there were heavy resistance levels as some people sold their tokens to preempt those unlocks. What that did was cause the price to range for several months. Newer investors and community members really wanted to break out from that range by removing the unlock schedule altogether. This way, anyone who wants to dump can do so, and we could just get over with that. And with no more preset resistance levels, XRD could enter organic price discovery once again. Personally, I was thinking that this may cause some short-term pain for long-term gains. But then again, maybe not. Because remember, Solana had their massive token unlock in January of 2021. A lot of people thought it would be really bad for price action because it would lead to massive dumping. But instead, it kicked off a massive bull run for Sol. Not saying that that's a guarantee to happen for XRD, but maybe something similar could happen since the rest of the tokens are now unlocked. The second reason to make a change was because the trading volume was suffering due to investor psychology. By ranging for so long and people preempting potential sellers, that caused volume to dry up and stay around the low 7-figure range. That kind of leads to a vicious cycle because Radix and their community wants to be listed on more top-tier exchanges, which could help increase volume. But exchanges also don't want to list projects with small volume. So they were just stuck in this self-fulfilling prophecy, really. And the third reason is just to get those concentrated early investor XRD tokens spread out to more investors so that the network could become more decentralized, which is an important goal of every public network, of course. And the fourth and final reason why people wanted to change was just to simplify the tokenomics. Because honestly, that whole unlock scheme was super complicated. It took me, someone who's been deep in the crypto world for years now, quite some time to fully grasp what was going on. So you can imagine for newbie investors how they would look at that and be like, what? It likely turned them off from the get-go and they just went to invest elsewhere instead. So with all of these strong reasons to make a change, it was not surprising that the community was overwhelmingly in favor of it. When they made a poll for this change, 67% of the community voted for it, rising to 72% when weighted by tokens. That's cool, of course, but what exactly are the new tokenomics? I kind of hinted at it before, but let's dig into the details now. So the previously locked supply became officially unlocked on September 15th. At that point, the circulating supply became 9.6 billion XRD. Just check out this chart of their token distribution for a better picture. Basically, everything is now unlocked besides the green portion, which is for the stablecoin reserve. And the dark blue portion are tokens that don't exist yet, because it represents network emissions for the stakers and validators. So the stablecoin reserve has 2.4 billion XRD, and that's the only thing that's locked now. That 2.4 billion plus the 9.6 billion fully unlocked gives us a current total supply of 12 billion XRD. And then another 12 billion XRD will be slowly emitted to the validators and stakers at a pace of 300 million per year for a span of 40 years. That comes out to a final max supply of 24 billion XRD, which is their hard cap, just like the 21 million Bitcoin that will ever be mined. By the way, as for the stablecoin reserve, that's for a future potential stablecoin project on Radix. The detail has not been announced yet, but it could work in a similar fashion to Luna and UST on the Terra blockchain. The foundation said that it will be either used within the next 10 years for this native stablecoin, or it will be burned. But yeah, everything else you see on the pie chart is fully unlocked. The founder retention portion, which is held by the company treasury to fund development. The community portion, which is for the early community members who funded the project years ago. The Radix tokens jersey, which is held by the foundation for nonprofit ecosystem funding. The network subsidy, which are the grants for paying early validators to get started. Then we got your developer incentives. And finally, their October 2020 token sale, where they raised roughly $13 million. Now, besides this massive unlock, there are a couple other important points to know. The first one is that they are proof of stake. So a lot of people are locking up their XRD tokens as stakers. In fact, the amount of XRD staked has pretty much doubled since the unlock to almost 2 billion. The second point is that all transaction fees on the network are burnt. This amounts to around 15,000 XRD since this mechanism began in late July. And it has a deflationary effect on the total supply. As the Radix network gets used more and more, this effect will only grow larger as the amount of transaction grows as well. Both of these points are arguably favorable to holders because they reduce the amount of XRD floating around so that your share of the pie gets bigger with time. All right, it's time to take a step back and look at the key takeaways of why this could be bullish long term. Of course, the tokenomics play a huge role. The built-in resistance levels are now gone and we're in discovery mode, and who knows where the price could go next. My fingers are crossed that this change will lead to a similar price action as Sol, aka an absolute rocket ship after the massive unlock. I also expect XRD to enter the top 100 coins on CoinMarketCap and CoinGecko any day now. And no, this is not me being a moon boy promising 100x gains. Just look here at their CoinMarketCap profile. It shows Radix protocol having a market cap of over $1 billion already due to the now updated circulating supply. But the aggregators have not fully verified that yet, so it has not been reflected in their overall rank. As you can imagine, appearing on the first page of these sites will bring Radix more recognition and attention, which is yet another reason to be bullish. And finally, it's always important for these things to be backed by solid fundamentals as well. After all, Radix is an incredibly ambitious project with the goal of capturing the entire financial system with their DeFi protocols. They are tailor-made for DeFi after all, with scalability, composability, purpose-built developer environments, and much more. Like I said, I won't go into the details of their fundamentals in this video, but you definitely should watch my previous video about them right here, and also visit the links I'll leave for you down below if you want to learn more. Anyways, I'm Kevin from Coinsider. I can't wait to see you on the next one, and cheers!